I'm David Peltier, Portfolio Manager of the Street's Dividend Stock Advisor newsletter. The one question I hear most often about dividends is, when do I have to buy a stock in order to receive the payment? The answer is more complicated than you would think. The company doesn't tell you this date when the dividend is announced, and it's not easily found in the financial press. That is, until I coined the term the must-own date over a decade ago. Terms like record date and ex-date are commonly thrown around in dividend parlance, but the must-own date is the simple answer that most folks want to drill down to. First, when most dividends are announced, the company generally says it is payable to shareholders of record on a certain date. This is useful information, but investors often confuse this record date with the cutoff to actually receive the dividend. The difference is that stock trades actually settle 3 days after the fact. Similarly, the ex-date is 2 trading days before the record date, so another way to look at the must-own date is that it's the day before a stock goes ex-dividend. So now that we know to subtract 3 days from the record date in order to determine when the must-own date is, how do the dynamics of the dividend actually work? Here's an example. Pfizer, ticker PFE, which is a holding in the model portfolio of our Dividend Stock Advisor newsletter, increased its quarterly dividend last month to 28 cents a share, which is a yield of 3.6%. The company will pay the dividend on March 3, 2015, to shareholders of record on Friday, February 6, 2015. Looking at the calendar, we can determine that the ex-date will be Wednesday the 4th, and the must-own date will be Tuesday the 3rd. Again, only investors at the close of trading on Tuesday the 3rd will receive the dividend. You could have owned Pfizer for 5 years, but if you sell it on the must-own date, you will not receive the dividend for that quarter. On the other hand, it's possible to buy Pfizer shares in the final minutes of trading on Tuesday the 3rd and receive the full dividend at the open of trading on the ex-date. Wednesday the 4th, Pfizer shares will be adjusted 28 cents lower. Now this is to reflect the dividend being taken out of the stock, but there's no penalty because of the adjustment. Dividends are an important part of investing for long-term growth, but the mechanics of how they're paid can be confusing for investors of any level. Check back here regularly to learn more about how dividends work and how they can be used to enhance overall returns.